So, you inherited a house from a family member, and now what? First, I want you to give yourself time to grieve and process the loss of your loved one on your terms. This can be an emotionally taxing time. If you're inheriting the house, that could also mean funeral arrangements fall to you as well. And that can be a lot to deal with on top of processing your grief. Second, in this video, I'm going to answer some of the most common questions of what to do when you inherit a house. I'm Cindy Bunch, and I've been a realtor in the North Metro Atlanta area for over 20 years. And I've helped a number of people in your exact situation. So I'm going to address the real estate side of things. That said, every situation is different with its own challenges. So you should also seek counsel from an attorney for appropriate legal guidance. I'm not an attorney, and the purpose of this video is just to share my experience in real estate. So none of what I'm going to say should be considered legal advice. Okay, now that the required legal disclaimer is out of the way, let's dig in. Typically, the very first thing you want to do is make a plan for taking care of the property. You know, settling the estate can take a while. Don't let the home fall into disrepair or get behind on any of the expenses with the property. That will cause so much more stress later. So here are some of the items that you need to plan for. One is insurance. Update the policy if needed. Keep up with payments. It's very important that you maintain coverage on the house. A mortgage, if there is one, please continue making your payments, if at all possible. There are always property taxes to consider, especially if the house is paid off or the previous owner did not escrow taxes. And then you've got utilities. You'll have to make some decisions about, are you going to leave all of them on or not, and kind of pros and cons. Next, what is probate? Probate is really the legal process of validating a will and determining inheritors. The existence of a will makes this process simpler and sometimes faster. Without a valid will, the probate process includes distributing assets according to state laws. The more complex or contested the estate is, the more time it will take to settle and distribute assets, such as a house. Be prepared that the probate process can take a long time and can be potentially expensive, especially if some of the potential heirs are at odds with each other. In particular, we've helped a number of families in our part of North Metro Atlanta to deal with a real estate property that has been left by a family member. Most of the time, it's gone very well. The situations where I've seen it be, even though it's a sad situation, where people feel the most resolved is they've been in communication before the death occurs. There is a spirit of cooperation. One person may be the designated executor, or there could be two co-executors. But either way, it's cooperative, there's communication, and what it takes for us to be able to list the property is they have to receive the letters of testamentary back from the county where the property was, where the will is probated. Once the ownership of the house is determined, you have a few options as to what you may want to do with it. Sometimes family members want to move into it. We really had a situation recently where a mom died, the elderly dad was still there. Our clients chose, with the support of their siblings, that they would move in with dad and they would sell their existing house. Other situations we've known of where we provide a comparative market analysis for people, and then one sibling buys out the others because they still want to keep that house. It can get a little complicated, but it just depends on individual situations. If there's a mortgage, you have to check with the existing lender for options. You might be able to add your name and assume responsibility for payments, but it's more likely that you'll pay off the mortgage or refinance into your name. Occasionally, someone wants to keep the property in the family, and they may want to rent it out. Many different ways you can do that. If you're not local, you probably would want to hire a property management company. Sometimes people want to get long-term tenants, 2 years or more, and then other people want to make it a vacation rental. It all depends on where the property fits into your personal needs and goals. Repairs or updates might need to be made to make it rentable. And so you have to kind of keep that in mind. What would it cost to make those repairs or those updates, and what can you get in return? Make sure if you're thinking about a short-term rental that you consult your local ordinances for rules and regulations. Counties and cities have different requirements as to what they allow. And also make sure you consult with your tax advisor if there are going to be any changes for your own personal tax implications. The thing that I see the most often is most of the time people want to sell the property. And that is likely the best option if keeping it just doesn't make financial sense, or if the upkeep on it just isn't feasible. Remember though, you may need to consider doing some repairs or updates to make it sellable. Depends on whether your goal is convenience and speed, or if the goal is to net as much cash as possible. Either way, it can be done. It's just a matter of who's paying for what, how much time do you have, and who's going to monitor the projects. Marketing the home to sell is no different than if you were promoting your own personal primary residence for sale. And, we consult with people all the time to talk about what strategy makes the most sense for them. Okay, what about taxes? Well, first of all, if the total of all inherited assets exceeds $12 million, it's going to be subject to federal estate tax. Here in Georgia, there are no state-level special taxes for estates or inheritances. So whether it's below $1 million or it's over $12 million, in Georgia we don't have something special for taxes for estates. But again, if you have any questions on this, it's always best to reach out to your tax advisor or an attorney. The tax that more commonly impacts inherited homes is the capital gains tax. If you decide to sell, your profits might be subject to this tax. Luckily, the fair market value of a home resets upon the owner's death, and you don't have to pay taxes based on what was originally paid for the home. So for example, if mom and dad bought their homestead back in 1964 for $50,000 and it's now worth $450,000 and you sell it for $475,000, your taxable gains are $25,000, not $425,000. And so that's how that calculation would be figured on the taxable gain, not on the sales price. It may be uncomfortable, but one of the best ways to handle inheriting a home is to discuss plans with the homeowner while they are alive. Work with an attorney to create a valid will or even set up a trust. There are several options for you to make inheritance a less stressful experience. So what other questions do you have about inheriting a home? Leave them in the comments below, and be sure to check out my other videos with selling tips, so if you decide to sell your inherited home, you can get top dollar.